Hey guys, hey, can you hear me okay? Um, Mr. Steven, Mr. Matt. Okay, cool. All right. Well, pretty messed up stuff, man. You know, World War III, here we come. This is just unbelievable. This is just so disgraceful. Okay, it's like, all right, let me just review here for a second. Are you really in Israel, Avi? All right, let me just review here for a second. So, was it like what, not even a month ago, where we freed up $6 billion for Iran? Iran, who on the front of the Wall Street Journal says Iran held plot attack, and then we get Anthony Blinken um, coming out and say like, "Oh, we haven't confirmed. We didn't know." It's just it's well, I'm really sorry, dude. Be safe over there if you can. I have a lot of Jewish friends, and it's just messed up, man. These people are, they're like taking friggin' hostages. There's Americans who are dead. There's going to be American hostages. Um, these people are just. I don't even know what to say. I don't want to say too much, but you see these pictures of like, these the Palestinian protests or whatever, or the Islamic protests. He's like, you don't see any women. It's all just men. He's glad his mic is down. Yeah. Hey there. How are you? I don't know. It's just so bad, man. They're worse than animals, man. They really are. All right. Well, I'm going to try to stay somewhat positive as much as I can. Um, but anyway, yeah, this is pretty bad, man. Pretty bad. All right. Let's see. I guess I'm just going to try to stay focused. But I don't know, man. I have a bad feeling about this. You got that. You got friggin' Ukraine. All right. So anyway, let's just try to stay focused on the markets here. Um, it's Columbus Day here in the States, which means the bond market is closed. So probably be a little bit on the slow side. Anyway, here's oil. Now, we talked about this jumping, right? We said it's got down to this level that had been resistance, and sometimes resistance turns into support. So I'm a little surprised oil's not much up more, but it's still pretty early. Well, we probably would have had a bounce regardless of what's going on over in the Middle East there because of just the technical situation here. We got oversold. We got to level that was resistance. So levels that were resistance, as we know, can turn into support because we got people who sold who regret their decision when the price goes higher. They say, "Oh, I'm going to buy my oil back if it gets back to my price." And then you got all these buyers kind of flooding into the market at the same time around the same price level. And then they all kind of just start jumping in front of each other. So that's oil. So I guess we were expecting this bounce. Of course, we weren't expecting, wow, war to break out over there. But I mean, I don't know if it's coincidental or whatever. But anyway, so that's a bounce there. All right, so let's go look at it. We looked at natural gas. We were talking about how natural gas was breaking out. Wow, look at that. It sure has broken out. So it's a little bit overbought. It's probably going to come back in a little bit, but I would think that it's safe to say that this $3 level is broken. Maybe we come back in a little bit, but my guess is that this continues to go higher. All right, let's go look at stocks. Actually, let's look at the headline news and see if there's anything else besides the war. Um, Iran helped plot attack over several weeks. Iranian security officials helped plan Hamas's Saturday surprise. I got, I'm gonna go. I don't like to do this, but I'm gonna go take a look at CNN. Let's see what kind of spin they're putting on it. At least, I mean, they attacked a music friggin' they attacked a concert. Okay, here we go. All right, here we go. This just shows you something that really sticks out here. All right, CNN, U.S. does not have direct information linking Iran to Hamas attacks. Okay, let's not forget. We just gave and it's not probably not a coincidence that they're seizing hostages because guess what? When people get hostages, we give countries a lot of money to get them back. So we just freed up $6 billion, gave them these hostages. CNN, U.S. does not have direct information linking Iran to Hamas attacks. Wall Street Journal, Iran helped plot attack over several weeks. U.S. does not have direct information linking Iran to Hamas attacks. Iran helped plot attacks over several weeks. All right, so am I like kind of missing something here? CNN, U.S. does not have direct information. We can be quite clear that Iran is broadly complicit in these attacks for having supported Hamas going back decades. What we don't have is direct information that shows Iranian involvement in ordering or planning of the attacks that took place over the last couple of days. It's something we're going to have to look at closely. And it's like, all right, well, maybe if we didn't just give them $6 billion, they would be telling the truth. So over here in the Wall Street Journal, Iran helped plan attacks. So which one is right? Iranian security officials helped plan Hamas's Saturday surprise attack on Israel and gave the green light for the assault at a meeting in Beirut last Monday, according to senior members of Hamas and Hezbollah, another Iran-backed militant group. Officers of Iran's Islamic Revolutionary Guard Corps had been working with Hamas since August to devise the air, land, and sea incursions, the most significant breach of Israel's border since 1973. Details of the operation were refined during several meetings in Beirut. U.S. officials say they haven't seen evidence of Tehran's involvement. In an interview with CNN that aired Sunday, Secretary of State Anthony Blinken said, "We have not yet seen evidence that Iran directed or was behind this particular attack, but there is certainly a long relationship. We don't have any information at this time to corroborate." So it's like, all right, well, there's war starting, people are dying, but let's just try to get the public relations spin here right. Because, oh, yeah, well, what was it? A couple of weeks ago, we just gave Iran $6 billion, right? Remember when Obama flew in the money, the cash on the plane? If you read the 9/11 report, it says quite clearly that a bunch of those terrorists were in Iran right in the year leading up to 9/11. So what were they doing there? Were they on vacation? I don't think so. So instead of going into Iraq, we should have gone into Iran. But anyway, this is really just kind of interesting, though. I mean, it's pathetic and it's sad, but it just shows you the state of our politics here. So you got CNN here trying to like cover for the Biden administration. And it's like, all right. Anyway, let me shut up. Move on. All right, natural gas breaking out, oil rebounding. Yeah, remember when Barry used to be like, Pakistan? Yeah, it's Pakistan. He's got to try so hard to enunciate. I remember after, just to show you just the mindset of people that we're dealing with here. I don't know if you all remember this, but I remember sitting on the trading desk where I was working, and after Barry never wore an American flag pin on his suit because I guess he didn't want to offend the Eurotrash. But after he got that shellacking in what was it, 2010, I guess? The midterms. He like comes out and all of a sudden he's got his American flag pin on, you know? And it's like, is this really what you guys do? You sit around at a conference table and you talk about, oh, should I wear my American flag pin? Well, maybe you should wear it. Oh, well, I don't think I should. I don't want to offend anyone. Oh, well. It's like, this is really what these people do. They sit around and they talk about this stuff. All right. Anyway, so we had a really big move higher on Friday, which kind of caught me off guard. But we did get down to around 420, like we talked about, and we saw the market come off of there. Not surprisingly, right? Things tend to get to support and they tend to bounce. So let's look at the low trades of these last 4 days. So low trade here, 420.18. Low here, 420.56. 421.17. And then the low here was 420.60. So what happens is the people that want to buy, they look around and they notice, hey, things aren't moving any lower. There must be something going on. Markets go lower because there's not enough buyers, right? Well, if the market stops going lower, people that want to buy look around and they say, hey, must be some new buyers coming in here. That's why the market's not moving lower anymore. So if I don't want to miss out here, I better be willing to pay a higher price. I was at 420, but now I better go to 420 and say a half. Someone else sees them and they're like, all right, well, someone's at 420 and a half. Well, I don't want to miss out. I'm going to go to 420.60. Someone else is like, oh, that person's been in 420.60. I'm going to go to 420.70. And you get this snowball effect. And this is why when we get to support levels like here, we tend to bounce because you got these anxious buyers outbidding each other. And it's the same reason, like when we get to resistance, well, it's the opposite reason. We get to resistance and now it's the kind of the same thing, but it's also the opposite, right? I believe that's kind of an oxymoron. But you get the sellers now are getting anxious. And it's the sellers who start to think, wow, the market moves higher because there's not enough sellers. There's not enough supply. The market has stopped moving higher. Therefore, that must mean that there are new sellers coming into the market. So I better reduce the price I'm willing to sell at so the buyers will come to me. Buyers are going to go to whoever is willing to sell at the lowest price. So we get to support, we tend to bounce because of anxious buyers. We get to resistance, we tend to bounce or we tend to sell off because of anxious sellers. So it's not because of what they're telling you on the news. It's not because of the debt ceiling or the budget deficit or whatever the story of the day is. It's because supply and demand and psychology. That's really what moves markets. All right, so let's see what's going on over here. So we're back. Well, gonna have to. My guess is the market's going to continue to go lower. I don't know if we can get a reading on interest rates here because the bond market's not open today, but let's just check it out. Yeah, so 4.78. But you can see we're still in this like clear uptrend here. So remember, this is the inverse of bond prices. So if we just invert this chart here, we can just see it's like a breakdown of the bond prices. All right. So yeah, my guess is that tomorrow the bond market will open up, rates will go up, rates will rip higher, and yeah, and that'll push the equities down. All right, so let's go back to we got to watch Apple. Remember, we've been talking about this important 175 level for a while. So we're back to 176.37. So we're still pretty much right there. Oh, you know what? I came across something that I think is pretty interesting. Check this out. So I'm going to put on a 20-day moving average, a simple moving average, and a 20-day weighted moving average. So the simple moving average is you just take the average closing price of the last 20 days. The weighted moving average puts more emphasis on the more recent days. In other words, yesterday might count twice as much as a day from, say, 3 weeks ago. But I got some really good signals here. So it's something maybe we should keep an eye on. Let's see, moving average weighted. So I'm going to go with 20. Oh, and by the way, yeah, oil crisis. Oh, gee, great. Our strategic petroleum reserve is down 60%. Oh, how about that? All right, so look at this, right? So we got some really good signals here, at least on Apple. So we got the 20-day simple, the 20-day weighted. The weighted is going to be closer to the most recent price because of the way it's calculated. But if we go back, let's just go back a year. All right, so we got this buy signal in January. Then we got a sell and a buy. Bought, sold. This would have been break even. But yeah, we got to just kind of keep an eye on this. Is it time to buy bonds? I don't think so. Not yet. Maybe there's going to be some kind of a bounce there, but I think that rates are going to continue to go higher. All right. Anyway, so that's Apple. Let's look at Microsoft. Microsoft and Apple are like 40% of the tech sector. And look, we got some really good signals here too with this moving average. The thing about these moving averages is they tend to catch these long trends, but in sideways markets, they tend to get whipsawed, meaning you get false signals. All right, so this is down, but considering the move we had on Friday, this is not a big move lower here. All right, now the next thing we're going to look at is we're going to just go right to the financial sector and see what that looks like this morning. So that's down about 1% in the pre-market. Now, I think look at how good this moving average system was here too. I mean, geez, it's almost like perfect. Would have sold up here. So your last trade was to sell around 35, then you would have bought back around 34.20. All right, I think what we really got to keep an eye on is the banking industry, right? You have your sectors and you have your industries. So your banking industry is part of the financial sector. So let's look at the banking industry stocks here. All right, I'm gonna have to get rid of these moving averages. But wow, look how good look how good this works. I might have just discovered something here by accident. Does make sense though, if you think about it, because the weighted average is going to be tighter or closer to their most recent prices. So look at this. You would have sold here around 48. You would have bought around 46, sold at 48.70, bought at 45. Then you would have sold right before we had this massive sell-off here. So you would have sold at 48, and then you would have bought back down at 36. Huh, maybe I should just trade this and retire. Anyway, I will make these at least smaller so they're easier to read. Actually, you know what? I'm just going to take these off. But just remember, simple 20-day moving average and weighted 20-day moving average. All right, so the key to watch here is we're going to call it 35.50, or in my day, that was called 35.5. You've been using the 220 and the 200. Yeah, cool. The good thing about having some kind of a model or a strategy, I mean, if you're a trader, you need something, because if not, you're just going to guess. And when people guess, they tend to lose money, right? I mean, maybe you'll get lucky here and there, but in the long run, it's going to get you. Now, there's no such thing as a trading system or a model that's perfect, right? Some of them are more accurate than others. But the important thing is what it does for your emotions. No one's going to have a system that's perfect, right? The greatest traders in the world lose money. They just don't lose a lot of money. That's the difference between someone who's good and someone who's not so good. The good traders take small losses. Bad traders take big losses. So we even saw Steve Cohen in that article in the Wall Street Journal. He said that his best traders make money 2/3 of the time. Well, that means that 1/3 of the time they're either breaking even or losing money. My guess is that it's breaking even or losing a little bit of money. And I think, to be perfectly honest, I think a retail trader can have a better success rate than 2/3 of the time because his traders are trading literally hundreds of millions of dollars. So your typical retail trader isn't going to have those liquidity constraints. But the point I'm making is that just like the greatest basketball players in the world miss shots, well, the greatest traders in the world also don't make money on every single trade. Speaking of which, you guys see the Patriots yesterday, man, they got friggin' crushed. Absolutely crushed. They've gone from like with Tom Brady, like the best team in the league, to now they're like the worst team in the league. And I saw Sack Jones got crushed a bunch of times. That's their quarterback. Then I was watching the Jets. Or the Jests, as we call them. The Jets versus the Broncos. I mean, the Broncos aren't very good. The Lions went from. Well, I don't know, man. I've always kind of said that Bill Belichick is overrated. And this is kind of Jets. Did they play last night? Is it, all right, so we okay now? Huh. All right, I'm going to go look at our healthcare sector. Okay. All right, so now it's working good. Yeah, I guess there's something wrong with Restream. I don't know. All right. Anyway, so we had a big move here in our healthcare sector, and once again, I think as a trader, what you got to pay attention to here is where did we reverse? Well, pretty much at a level that was support before. When we get to former support levels, there tends to be a bounce. And that's because of our psychology, right? You got people who sold back here around 126, 127 in May, and then the price blasts off. And a lot of these people are like, I made a mistake. I want to buy my shares back if I can get them for the same price I sold them at. So when we start to get down to the level that had been support, what happens? We find support again. You got these remorseful sellers trying to buy their shares back, And then you get into that bidding war. Buyers start jumping ahead of each other. And as a result, what happens is you get to support and you get a move off of support. You get a bounce off of it. So that's our healthcare sector. So we had a big move on Friday, but we're not really giving back that much this morning. I'm actually surprised the market's not weaker, but it could have something to do with the fact that the bond market is closed. So, if the bond market's closed, that does affect the stock market. All right, so actually we are going to get a read here on interest rates. So this must be coming out of the futures markets. All right, so the 10-year yield is about 4.797, or let's just call it 4.8, which is pretty high. I just want to look at our consumer discretionary sector. I like to look at these sectors because if you know what's going on in the sectors, it kind of helps you get an idea where the broader market's going to go. There's 11 sectors in the S&P. And I mean, we have utilities, basic materials, and real estate are very small. They're all about 2.5%. But the other sectors are important. Energy is only about maybe 4.5%, but energy prices affect everything. And then different things are in the driver's seat at different times. Right now, I would say probably the most important thing to watch is the financials. But here's our consumer discretionary sector, and we can see we're in this range here. 161 on the upside and 156 on the downside. So what is a range? Remember, we got resistance at the top and we got support at the bottom. So we get up to the resistance level and the sellers start to get nervous that they're going to miss out. So they start to undercut each other and you get a sell-off. You get to the support level and the buyers start to worry that they're going to miss out. So they start to outbid each other. Now I'm going to true this up a little here and just kind of move this up to there. So we're going to call it 157. So Friday's low was 156.94. So pretty close to 157. All right. I guess we can look at our industrials. Yeah, you see, now look at this, right? So we had this big move on Friday, and where does it stall out? Right at this important 101 level. This was resistance back here. Level is resistance back here. And now it's become resistance again. So for whatever reason, this level is important. So the market rallies, and it's not a coincidence that this is where we kind of found a top. What was resistance back here, converted into support over here, and now it's converted back into resistance. So understanding where these price levels are, it's kind of, you got to look at it like this. It's kind of like your roadmap. We call it your roadmap to success. If you know where the important price levels are, guess what? You know where there's a good chance where things are going to turn. It's one of my guinea pigs. I think that's Walker, Texas wrote it. He's funny. He's got a really big personality. All right, let's go see what's going on in the news here. So we got oil. Ray Dalio. Ray Dalio calls McCarthy's ouster as House Speaker another step away from democracy and towards civil war. All right, let's see what Mr. Dalio has to say. Ran Bridgewater, the biggest hedge fund in the world. I've known a lot of people that have worked there, man. And they say it is just a you know what show. Just really, really ruthless and a lot of backstabbing. So I'm glad I don't work there. I wouldn't be surprised if one day, and I'm not saying that it's going to happen and I don't want to get sued, but I wouldn't be surprised if one day these guys blew up. When you hear about these things, like I think what happens is some of these guys make so much money that they don't think that the rules apply to them anymore. Like back when I was working at SAC, we had a meeting about like sexual harassment. And I remember going into the meeting and it was like me and one other person were the only people there. Everyone else was just like, I'm not going. I'm going to go home. I was out like 4:30. But it just shows you, it's like these people make so much money, they think that things don't apply to them. All right, let's see what Dalio says. I hope it is now clear that the two parties are squaring off into monolithic blocks that are controlled by uncompromising, win at all costs extremists, and that most everyone will be forced to pick a side and fight for it. Well, they really are funny. Guinea pigs really are funny. Their personalities are all so very different. Some of them are mellow, some of them are like really kind of demand attention. All right, you know what? I don't really care what Ray Dalio has to say. He's a twisted dude. I read that Principles book that he wrote. I think I've brought this up before, where he says like, oh, if you're driving down the road and you see a dead squirrel, you shouldn't feel sorry for it because it's a dumb squirrel and now it can't reproduce. And it's like, dude, is that really what you think about like when you're driving around town? You know? And then after he wrote that book, this is pretty twisted, but his son got into some car accident and he got killed in Greenwich up here. And no one really, I think the police probably kind of suppressed it, but he was in a like a little, I want to say it's really a strip mall, but maybe a little like shopping plaza where there's maybe like 10 little stores there. And somehow he lost control of his car and he crashed into, I think it was the Verizon store. And, um, yeah, they also eat them down in South America too, man. They're like chickens, like we eat chicken here. They eat chicken down there. But the best pet I ever had was a guinea pig. It was hilarious. Caramel was his name. Um, what was I talking about? Oh yeah. So anyway, so somehow his son lost control of his car and crashed into a store, and he ended up dying. So I don't know what happened. I don't know how you can lose control of your car in a parking lot. But anyway, I don't know. I guess you get all those billions and billions of dollars, and it kind of just warps you. All right, so the Bank of Israel to sell 30 billion in foreign exchange. Social Security may have paid some people too much. All right. Well, I don't know. It doesn't really seem like too much is going on here. Let's see what's trading in the pre-market active. Seems like it's a pretty slow day though so far. Considering all the news, it seems pretty slow. They eat bugs over there too, right? Let's see. Most active pre-market gainers. Let's take a look at this. Para Zero Technologies. Those are penny stocks, but we'll take a look at it anyway. It's probably just some like Reddit thing. Para Zero Technologies. The thing about this stuff is if this like something blasts off because of some Reddit chat room thing, it's almost like, and there's no like real news, it's almost a guarantee that it's going to reverse and come back. But the trouble is, it's really dangerous to short these things, and most of them don't, or something like this probably doesn't have options on it. So let's look for something that is a little bit of a higher price. Duos Technology Group. Um, Applied Digital Corporation. All right, let's check on it. Applied Digital Corporation. All right, so these guys are trading on earnings. So it's 563. Now, if I was looking at something like this, right, and it's moving higher, and I'm thinking like, all right, well, where should I sell this? Well, one of the things you could do is just look at the former peaks. There tends to be resistance at former peaks because there are people who bought the shares up here who regret their decision when the price goes lower. And well, I guess if you're starving, the bugs would probably seem pretty appealing. So I would look at the former top, right? Markets tend to run into resistance at former resistance levels. What do we got on the downside here? Well, if you think about it, man, think how gross eating animals is in a lot of ways. I wish I was a vegetarian, but I don't know. It's just too tempting. Like we got this meatball pizza on Friday night, man. It was good. Anyway, so I would look for resistance here if we get up there. This guy I know, I haven't seen him in like he works at this restaurant where I go to, and I haven't seen him in like a year. And he like lost all this weight. I'm like, what did you do? And he was just like, he's like, I every morning I have a hot glass of lemon water, like hot water with lemon in it when he wakes up in the morning. And then he said he just went vegetarian, and that's all he did. He lost a lot of weight. I have no problem with feeding animals, but I do think that they should be treated well. ZJYL. I tell my wife to buy kosher meat because the animals are treated humanely. ZJYL. You drink a lot of water with lemon. Yeah, I got to start doing that. All right, now let's look at what happened here. Now, look at this, right? We got this. I have no idea what's going on with this stock, but we had a big sell off on Friday. And it doesn't seem to be any news. But look at where the sell off stopped. Right? Pretty much right at the level that had been resistance. So resistance can turn into support. You got people who sold here who, after the price goes higher, a lot of these people are just like, I shouldn't have sold. I made a mistake. I'm going to buy my shares back if I can get them at the same price I sold them at. So because you have enough remorseful sellers placing buy orders, the level that was resistance turned into support. And now we're bouncing off of it a little bit this morning. Let's see. Gin Medical receives non-compliance notice from NASDAQ. Gin Medical said late Thursday it was notified by NASDAQ that the company is not in compliance with the minimum requirement of 300 public holders. Wow. I don't think I've ever heard that one before. I mean, it trades 100,000 shares a day. You would think there'd be more than 300 public holders. All right, let's see what else is going on here in the pre-market. Windtree Therapeutics, Calon Petroleum Company, CPE. Let's look at that one. Yeah, I mean, they could get delisted. Yeah. Companies want to be on exchanges because some investment firms have rules that, like, all right, well, we can't invest in a stock unless it trades on a major exchange. So if something gets delisted, then all of a sudden there's just a bunch less investors that are going to be looking at it. So this is why when something gets listed on an exchange, it tends to rally because it's going to increase the demand for it. All right, let's see if we can find another one here. Rave Restaurant. Matador Resources. MTDR. What's going on with this one? All right, so this is an oil company. So this is just trading up with oil. All right, everyone. I'm going to get going unless anyone else has any questions for me. I have a 9:45 call to get on. They're actually good. Oh, man. Don't worry, guys. I'm not going to let anyone eat you. All right, everyone. I guess I will see you all tomorrow morning. SLV? Sure. Let's take a look at that. Well, I mean, look at what happened here, right? We got down to this. Instead of looking at the SLV, though, I'm going to look at silver itself because SLV tracks silver, but there's more volume in the silver market. So might be beneficial to look at this. See how similar they are, though? So that's the ETF, and that's the actual future. So I would say here, it looks like we're getting pretty close to resistance, around 2230 for silver. So let's see where that would be in SLV. Yeah, you see, instead of watching this, I would be watching the future. Now, I would say I would be looking for resistance right around 2230, and we could see on Friday. Actually, this is today. The market's open. The high trade today was 2218. So I'd say you got clear support around 21, clear resistance around 2230. Those would be my levels. I mean, if I was going to buy this, I would wait for it to get down to here. I would wait for it to get down to probably around 21, unless it breaks out. See this resistance here? See, there's going to be resistance here because it was support. And there's people who bought over here who are going to be trying to sell over here to get out of break even. So levels that were support can turn into resistance. So this is why we have resistance here. But those are the levels I'd be watching here for silver. So if I was trading a commodity-based ETF, I would be watching the commodity as opposed to the ETF to trade, because commodities generally have much more volume in them. Also, too, silver's open around the clock, whereas the ETFs only trade during market hours. So the charts aren't going to look exactly similar, but this is what I would be looking at. And you can see here on the bottom, right, 2090. Low trade on this day was 2087. Low trade here was 2085. Low trade here was 2086. Low trade here was 2094. So right around that 2090 level is what we got to watch. PayPal, sure. All right, so PayPal to me looks like it could be breaking down here. Yeah, so see this level here? This is 5750. Notice how it was support. So here's what I would be watching here to see if this is going to trend lower. When levels that were support turn into resistance, it sets the stage for the market to move lower. So you got people who bought here who are going to be trying to get out of break even. So what was support, at least as of now, looks like it's converting into resistance. So it looks to me like this is going to go lower. I don't think I would buy it unless it looked like it was going to stay above 57, 54. Like maybe if it got up to like 58, that's where I would be thinking about buying it. But as of right now, it looks to me like it's going lower. Um, UNG, well, natural gas is a little bit overbought, but I do think it's going to move higher. Yeah, look at that. But again, if I was trading this, I would be watching the natural gas chart. So if we go to natural gas, we can see that there was that resistance at $3. But now looks like we're breaking out. So my guess is that this probably comes in a little bit, but then it continues to move higher. So that would be my call on natural gas. All right, everyone, I'm going to get going, but I will be back tomorrow morning, and I will see you all then. And thank you so much for joining us. I will see you tomorrow. Thanks, everyone.